another model set up here that presented itself. So we got a nice move from high, right, to the low here. Boop, boop. I know that's the wick high, but I'm gonna use the bodies for the measurement tool, right? So we'll put the measurement tool on it, bring it down. Yeah, I like that. Okay. So I'm kind of using the top of the wicks here, middle range there, kind of body of the wicks there. And then what happens? Let's look at the levels. So after you put your measurement tool, you wait, right? Okay, right here, that's a bullish candle. So unfortunately, this time you would have got chopped on this trade. Why? Look at these wicks down here. Jeez, 16. You know, that's a massive wick. So had you jumped in here, and if you put your stop there, you probably would have got wicked out. If you didn't get wicked out there, you might have got wicked out here. Unless you really, you know, could afford a wider stop and you put it below that low wick. However, now your stops increased, doubled in size. So really, this would have been a tricky setup. You know, ideally, you know, you would have waited for it to settle down. However, you know, how do you know it's going to settle down, or is it going to reverse right away? But judging from the wicks on all these, you can see that it's been wicky, right? So let's just assume we got in after the manipulation, right? So right there, boom. Okay. If you didn't get wicked out, if you held your stop, right away your TP1 got hit, so you would have been in profit. Okay, but what do? We move our stops to break even. So unfortunately in this trade, probably would have got stopped out, wicked out, because it did come back down here, and you know, hopefully it was a stop out, because this is pure manipulation, you know, so we need to protect your profits. Why do we do that? Because we can get back in again. Because look, it now closed above the 25% level, adds it closed above the EMA. Lovely, that's exactly what you want. More confirmation. So it hit TP1 again, profit. TP2 got hit. TP3 gets hit, full retracement, and if you had your runner in, geez, look at that. So you could have just trailed your runner and let her go. But once again, we never let a profitable trade turn negative, because look at that sell-off after that. So we book our gains from 25 to 50. You know, you would have captured 5 points there. And then if you got back in, you could have captured it again, another 5 points. But from 25 all the way up to the 100% retracement, that was 37, you know, 12 plus the 5, yeah, so that's, you know, 17-point scalp. And this is a 15-second chart, so, you know, you're not waiting around for hours. Okay, till the next one.